After doing some research on cybersecurity stocks, we found one that really stood out to us. That one is Fortinet, ticker symbol FTNT. Fortinet trades on the NASDAQ exchange, and its valuation really stood out to us.
So something I noticed that was really interesting, I was looking at the earnings reports over the past 10 years. I noticed that over the past about 7.5 years, Fortinet outperforms their revenue expectations every report about 2.6% every time. In the past 10 quarters, Fortinet outperformed revenue expectations about 2.4%. Past 10 years, Fortinet has outperformed estimates every time on average by 29%. And the best part is the past 10 quarters, the most recent 10 quarters, Fortinet averaged an outperformance of by 37%, which I think this is going to be really interesting with earnings coming up because they might be, again, undershooting it by that much.
I definitely agree. I think all that data really tells us there is that generally analysts really are undervaluing this company, or the market in general are undervaluing this company because their earnings historically have blown them out of the water.
Yeah, and I think it's going to make a great opportunity. It's going to really show in the next earnings call. I'm going to take a quick dive into their financials. So the revenue in 2019 was $2,156,200,000. And their net income in 2019 was $326,500,000. Now where it gets really interesting is their assets equate to $3,885,500,000 in 2019. They have $1.5 billion in cash and $0 in long-term debt. And I like cash flow. They're free cash flow positive.
It's an iron balance sheet we're looking at right there, it sounds like.
It is. It really is, especially for long term. I think this is a company that both growth investors and value investors need to really consider looking at, because I think this is one of, no matter what way you slice this is a great company for both purely growth and value investors, because value investors that want not only something that's undervalued, but high growth, this is a company to look at. Growth investors who want a company that's going to grow, well, 18% a year is pretty good, especially considering they've been constantly undervalued. So I think this is a win-win for both parties.
Mm-hmm. Yeah, and I mean, another competitor, like I'm going to look at here, Checkpoint Technologies, ticker symbol CHKP. They have an equally strong balance sheet and almost a similar valuation when you look at their revenue and market cap, if I'm not mistaken. However, this company doesn't have the same projected growth Fortinet does, the same historical outperformance Fortinet does, and the scalability Fortinet's platform has with all those big customers, it's just really not there for Checkpoint. And all the other businesses in the industry, besides those three, really just have, that I looked at least, messy balance sheets, steep valuations, or just an overall unprofitable business model that lacks any scale. And really, I think Fortinet nicely brings all of those things together that all the other companies don't have. It really feels like, to me, Fortinet has all that. And that's what really makes it the choice for me, or that's why that's my favorite stock in the cybersecurity space at this time. After listening to Fortinet's most recent conference call, you can really notice some interesting things. Like, there were really a few things that stood out to me there. One of which was their incredible geographic diversification and industry diversification. What I mean by this is they do business across the globe in a bunch of different continents, and they also do business in many different industries, providing them the cybersecurity side of that business for them. On top of this, they have a lot of deferred revenue. Their deferred revenue comes from contracts that are multi-month, multi-year, even maybe as long as a decade, of businesses that want cybersecurity for the long run. They don't want to have to reach out to Fortinet every year. Mm-hmm. They want to lock in the deal, get the service done for them, and have a simple process. And Fortinet provides a simple process.
I think that shows that Fortinet is the real deal, that companies are willing to go these long stretches partnering with Fortinet. And I think it really shows that, like, Fortinet knows what they're doing. They are the kind of the kings of this area.
Yeah, and piggybacking what you said off the long-term strategy and really believing in the company as a whole is, during the time of quarantine, they made a really strategic move that they talked about on the call, where they actually made their training program completely free to people interested in the cybersecurity space, and it allowed people to learn their software themselves. So these are some of the people they could hire right now, which leads me to my very next point, where on the conference call, they said that there was no plans for layoffs And in fact, they actually saw a great opportunity to keep hiring at this time, despite all the unemployment across America and many other different countries.
I want to go back off what you were saying about the free programs. I think this ties back to how I was saying about the company culture, how they really take care of their employees, and during these hard times, they still want to better their employees and not have to, clearly, because we know people are definitely going through financial struggles. They're not concerned about milking their employees for every penny they can. They clearly care about who's working with them, and it's clearly a nice community within Fortinet. I think that's a great aspect of a business as well.
Yeah, absolutely. And when you look at their balance sheet, it's clear the strength of their balance sheet, the little to no debt that they have, the 1.5 billion in cash allows them to keep increasing inventory and continue repurchasing stock. When it comes to repurchasing stock, when the coronavirus hit, many companies cut their stock repurchase programs, and they even went as far as to cut their dividends. Fortinet, however, never had a dividend, but they continued repurchasing stock all the way through, and they still are to this day.
I have to do a mini rant on Fortinet right now on their balance sheet, and
Let's
I think
hear
it's
it.
extremely important.
Let's hear it.
Fortinet has a rock solid balance sheet, and it is something you should never have to worry about. That you can still have a great company without over leveraging yourself, and they see that. It is, in my opinion, this is something that should be overlooked over everything else. That they're not putting themselves in harm's way over this mentality of we're so big, it does not matter what we do, and it shows the commitment to the investors as well, showing that they're in it for the long term. They're not in it for a quick buck.
Yeah, and don't forget that it's a founder-led company.
Exactly.
Two brothers. So now that we've seen what the company has done in the past, let's look forward. What are they going to grow? So when you're looking at this year, fiscal year 2020, we're looking at 23.5% top line revenue growth, with next year's growth coming in at 13.1% and an average of 18.13% per year over the course of the next 5 years. So what we're looking at here is essentially they're going to double their revenue in only 5 years' time. And this is already a company that's making $2.5 billion in revenue.
And I think that the most interesting part is that we can also take into consideration that outperformance, because off their estimates, they're underperforming.
And we do have to remember that that average 18% number is also being compounded. Mm-hmm. So with that, there is really a lot of different factors, but I think it's very reasonable to think this company is going to be doing $4 or $5 billion plus of revenue in 2025.
Yeah, and even if these are the exact numbers, 18% a year is still a lot. So whatever way you slice of this, it's still a great growth company.
Absolutely. And something else that just really crossed my mind now, do you think that kind of revenue growth leads to something like the company incorporating a dividend, especially with all that cash on their balance sheet with no debt?
I definitely see it, because they have the opportunity. They're one of the more competitive companies, and clearly they have the biggest clientele. They don't seem to be going anywhere, and they've been in business for years. And I think after this whole tech evolution and they really secure themselves, I feel, as number one, then I think we'll see a pretty decent dividend coming out of them.
Yeah, I mean, not even just that. When I'm looking at the industry as a whole right now, you can kind of see a lot of their competitors, not a lot of them, pretty much all of their competitors don't pay a dividend. So it's very possible that their thinking right now is we really don't gain too much by having a dividend. But at the same time, certain investors might look at that as like, oh, wow, this company is the only one in the industry that currently pays a dividend, and that might make them stand out. So I think they really need to highlight, is that more beneficial? Is that going to hurt them more, the dividend? Do they have more opportunity to use the cash for investment? I think that's really something the management team will kind of go over in the coming years.
Yeah, because you have to take into consideration as well, a lot of people reinvest their dividends. So that dividend money that they're going to pay out is going to come back to them most likely anyway. And no, go ahead.
No, I would say absolutely. Along with share repurchases, I mean, that's one way to show your investors that you're committed to the future. Share repurchases, dividends.
I think they need to figure out what has the bigger opportunity cost. Will they be getting more money through the dividend reinvestment or reinvesting it themselves? So I think that's one thing that they're going to have to take into consideration.